All right, today we're diving into the latest investor report from Fedbank Financial Services. You probably know them as Fedfina. And trust me, behind all the numbers and charts, there's a really cool story here. It's all about how they're financing the millions of small businesses that are, the real backbone of India's economy. So let's get right into it.
Okay, let's kick things off with a number that really jumps off the page, a 24.2% leap in their profit after tax year on year. Now that's not just a good quarter. That's a huge signal that their whole business model is absolutely firing on all cylinders.
And it's not just a one-off thing. Check this out. Their gold loan business shot up by a massive 36.4% in the same period. And look, this isn't some small side gig for them. It's one of their main engines. And right now, that engine is just roaring.
But big numbers like these only tell you what happened, right? They don't tell you the how or the why. So what is the real story here? How is Fedfina actually pulling this off? And maybe more importantly, is this growth sustainable? Let's dig in and find out.
All right, first things first. Before we get carried away with the growth story, let's do a quick health check. Is the company actually stable? How much risk are they really taking on? Let's pop the hood and have a look.
Okay, you're going to hear people in finance throw around terms like gross stage 3 assets. And yeah, it sounds super complicated. But all it really means is this. What percentage of their loans are sour? The ones that are at high risk of not being paid back? And in this game, a lower number is always better.
And Fedfina's number? It's just 1.9%. Now, to put that into perspective for you, in the world of lending, that is incredibly low. It really shows they aren't just chasing growth for the sake of it. They're being super selective and managing their risk really, really well. This healthy loan book is the foundation, the bedrock of everything else they're building.
And hey, it's not just them saying it. Just look at their credit rating. AA+/stable. For a company, that's basically like having a near-perfect personal credit score. It's a huge stamp of approval from the major rating agencies, telling the world they see Fedfina as a solid, safe, and reliable business.
Okay, so we've established they're on solid ground. They're stable. But who exactly is Fedfina? I mean, beyond the financials, what's their whole mission? Let's zoom out a bit and get the big picture.
You can pretty much sum up their entire mission in this one sentence. It's not just about lending money for the sake of it. It's about giving small entrepreneurs in all these rising towns and cities across India the capital they need to get started or to grow. This one idea, this is the North Star for their entire company.
So, what does that actually look like on the ground? Well, first off, they've got the serious backing of the federal bank, which gives them a ton of stability. Second, they have a laser focus on a super important and often overlooked market, the micro, small, and medium businesses that are the real engines of the economy. And finally, they have the reach to make it all happen, with a presence in 17 states and union territories.
So, let's get into the nuts and bolts of their business. How do they actually do all this? Well, it really comes down to what you can think of as a twin-engine model.
And those two engines are their main products. On one side, you've got gold loans. This is for people who need quick cash for immediate needs, and they can use their gold as security. Super common, super useful. Then on the other side, you have mortgage loans. These are for the bigger, life-changing moves, like expanding a business or buying a property. It's a really smart way to serve two totally different, but equally important needs.
And you can see that twin engine idea reflected perfectly when you look at their loan portfolio. See that? It's an almost even split between mortgage and gold loans. Now, this balance is absolutely key. It means they aren't dangerously dependent on just one source of income, which makes their whole business model way more resilient. So, what does all this pie chart stuff mean in the real world for real people? Well, it means helping a tailor get the loan they need to buy a new sewing machine. It means helping a tea stall owner finally renovate their shop. These are the actual stories, the tangible impacts behind all those big numbers.
Which brings us perfectly to their growth journey. I mean, how did Fedfina get from being a relatively small player to where they are today? It really is a story of smart, strategic expansion. This timeline here tells an incredible story of exponential growth. I mean, they started out pretty small, just 5 billion rupees under management back in 2015. They got a major boost from a strategic partnership in 2019, but just look at what happened after 2022. That's when they just hit hyperdrive, scaling all the way up to over 161 billion rupees in assets and nearly 700 branches today. Just wow.
And this chart really puts that recent explosion into sharp perspective. Going from $62 billion to $161 billion in just a couple of years. That is just staggering. They more than doubled the entire size of their business in an incredibly short period of time. And remember, this growth isn't just a bunch of numbers on a spreadsheet. It's physical, it's real. We're talking 699 branches across the country. That is a significant physical footprint, and it gives them direct, on-the-ground access to the communities and businesses they want to serve.
So we've seen the strong financials, we've seen the incredible growth, but what's next? Where do they go from here? Let's take a look at how Fedfina is getting ready for the future, and it involves looking way beyond the traditional balance sheet.
Well, technology is clearly right at the heart of their strategy for the future. They're using a fully digital process to make lending way faster and more efficient. They're using data and AI to make smarter, real-time decisions, and they have a customer app with over 1.2 million downloads, which puts all that power right into their customers' hands. Honestly, in a lot of ways, it feels like they're building a tech company that just happens to be in the finance business.
And you know, their vision for the future isn't just about cool tech. They're also really focused on ESG principles. That's environmental, social, and governance. It's this commitment to not just doing well financially, but also doing good for society. Everything from making sure their lending practices are fair and responsible to reducing their own environmental impact.
Which brings us to the final, really big question here. Fedfina's story is more than just about one company, right? It's really a test of this massive idea. In a rapidly growing India, can the combination of smart technology and accessible finance truly empower the smallest businesses on the largest possible scale? And honestly, when you look at their journey so far, the answer seems to be a pretty resounding yes.